You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry. We've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funkiest of tunes means it's time for the funkiest show here on the old Options Insider Radio Network, the final program of our broadcast week. Yes, it's time for TWIFO, This Week in Futures Options, a program where, as the name implies, you break down all the hot action in the week that was, and in some cases still is, from a futures options perspective. All the things on the other side of the fence. We're talking crude, maybe some gold, maybe some lean hogs, maybe some corn. You never know what's going to squeak into our analysis. And we also leave up to you guys a lot to hit us up with what you want us to talk about. You've made your wishes clear this week, so I think we have our marching orders heading for us this week. Of course, as always, you can stream it live every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern via Mixlr, MIXLR. And of course, if you want the nice, polished, beautiful podcast version, that comes out the following business day via iTunes and TuneIn and Stitcher. And of course, if you want to just make it easy for yourself, just head on over to the mothership, theoptionsinsider.com. It's all there, the podcast, the written stuff, the show notes, all that good stuff. However you like to consume the program, we got you covered. And of course, however you listen, live after the fact, we do love to hear from you guys. So hit us up via the website, via Twitter, however you want to reach out to us with your questions, your comments, your insights, your pearls of wisdom. we do love to hear from you guys. I don't know why, but we do. So keep those questions and comments coming. And joining me on the old program today, my futures options partner in crime. He is Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we like to use around here quite a bit called Quick Strike. Mr. Nick, welcome back to the TWIFO program, sir.
Yeah, thanks for having me back. And keep in mind, listeners, if you're out there, the links are live on the TWIFO report on cmegroup.com/TWIFO. So you can dive in and see all the same things that we're seeing while we're speaking.
There you go. I always forget to mention at the top of the show, of course, you can follow along, not just live with the show, but you can also head on over, like Nick said, cmegroup.com/TWIFO. TWIFO, and you can see all the cool reports there that Nick and I are going to use to talk about here on the program to break down all the hot action in crude, gold, or whatever. You can choose your product of choice. Just click that drop down there, choose your product, and you're off to the races. And as an added little nugget for you live listeners, Nick and his team have made those links live. So you can do exactly what we do on the show when we get into crude, for example. You can click on that top link there, the 47 puts, and see exactly how many went up and what else went up in that month and all the other fun stuff. So follow along. It is indeed pretty cool. And joining us this week in the CME Group hot seat, he's an old friend of the network, even though he hasn't been on in quite some time. He is Matt Bradbard over there at RCM Alternatives, the director of alternative investments, I should say, at RCM Alternatives. There's a lot of alternatives in there. Matt, welcome back to the network, and indeed, welcome to the TWIFO program, sir.
Thanks for having me, Mark. Long time. And Nick, good to see you or hear from you again. It's been way too long. We use your services over here, some of our clients, so no stranger to that, even though I haven't been on the show for a while. Good to be here.
There we go. Gone but not forgotten, and now he's back here in the new incarnation. Used to be the old Futures Options Roundtable. Now it is indeed TWIFO, this week in Futures Options. So everything good can't die. It just comes back better. All right, and we got the team assembled, the crew ready to go. Let's dive right on into it. I think everyone knows where we're going to start because it is the hot action that was going on yet again this week. Crude never wants for something to talk about, and that certainly was the case again this week. For the lion's share of the week, it was shy of that mystical, easy for me to say. It's the last show of the week, listeners. It's our mythical 50 handle, and it was a lot of that hand-wringing. Will it cross the 50 handle? Will it not? And of course, towards the latter portion of the week, in particular yesterday and this morning, really rallied north of the 50 handle again. So crude right around 50 to half, 51, depending where you're looking out there on the term structure then, but still firmly north of that 50 handle. A lot of that, of course, in anticipation of what's going to happen next week with the big OPEC meeting. So yeah, all that activity on the upside, having a lot of people keeping their eyes glued to crude. And Matt, since you're our guest today, we'll start with you before Nick and I dive into all the nuances of what's going on out there in the volatility and of course the hot strikes and the hot action out there in WTI options. You're obviously out there engaging with a lot of different clientele on the retail side and even on the institutional side, who I'm sure were hitting you up a lot this week, saying, what's going on in crude? I want to trade crude. So let's start there. How much interest are you seeing in crude, and what are people hitting you up about? What do they want to talk about? Is it that 50 handle? Is it something else? What are you seeing out there?
Absolutely. People always have an opinion on energy prices. I think the 50 talk is, there's a lot to do with that. You look at it from a seasonality perspective as well, moving averages, technicals. I mean, it's really just jockeying for position, and it looks like there's investors and traders both sides, like quickly looking this morning at where the action is on the strikes. There's a lot at the money, July calls, the 50 calls, 50 puts, and then $5 out on both sides, it looks like the actions are. So it's really a tug of war. People are taking both sides of it. I think you're going to have trouble getting above $52 to $53. What we're hearing is there's a lot of hedging coming in at that level. It also coincidentally is a trend line that has held for all of 2017 in combination with a 200-day moving average. Everything's coming in around that 52, 53 level. So, I think that you're probably capped at that level unless OPEC does something crazy, catches people with their pants down. But, I would suspect that That's the top of the range, and then on the bottom of the range, this 45 level looks like there's buyers at that level. They stepped in August of last year around Thanksgiving, and then most recently 2 weeks ago. So it's a hurry up and wait situation, but I do think the cut by OPEC, at least the market has anticipated that they're going to cut, and that's priced into the market as is. That's why we jumped here in the last couple of days. That's my take and what I'm hearing from the people that we talk to.
Are you seeing any bias to your clients these days? Are they leaning one way or the other? Or are they kind of mixed like the market is right now, and they're lining up on both sides of that 50 line?
The latter. I mean, you have guys that are selling this rally, and you had guys several weeks ago that were buying the dip, but I would say there's not a big skew one way or the other.
So no bias at the RCM clientele these days. They just want to sling some crude. That's
true.
Well, it makes your life easy, right? You don't have to worry too much about holding their hands through all of this fun stuff.
Exactly.
Well, there has been a lot lighting it up out there this week, so I think we'll dive right into it, as Matt just alluded to with some of the activity he's seeing out there. With this rally to the upside here in crude, as we said for a while, the bias from a vol perspective and a skew perspective still is predominantly to the puts. So you're going to see vol come off a little bit, and that's pretty much what we saw out here this week, with vol off not even a full point out here. So not really a shellacking, to use a technical term in any way, shape of the term. It's really more just what you'd expect to see as we move up the skew there a little bit, vol gradually coming off. Of course, there still is an event next week, and we'll get to that in a little bit, so that's probably having people keep some of their powder dry as well from a volatility perspective. I'll let Nick break down more of the quick skew in a wee little bit, but first let's get into what was really lighting it up this week. And number one with the bullet out here. Well, before we even get to that, it was an active week with open interest up about 6%. And once again, the lion's share of the business, the activity, even more than usual. Usually we see about, say somewhere around high 40s to low 50% of the volume in the front month. Right now we're seeing about 61, almost 62% out there in that front month. So the July contract. So a lot of interest out there, and a good reason for that volume is this number one strike we got out here. Number one with a bullet this week for crude out here was, if you're saying, was it the 50 strike? Because we're seeing a lot of push and pull around that. Was something? Nope. It was the 47 puts out here in the front month in July, with about 52,000 contracts lighting it up, with some pretty strong days, including Thursday with nearly 18,000 contracts lighting it up, about nearly 12,000 again today, and almost a similar paper, about 11,500 on Monday as well. And a good chunk of that on this strike is opening as well. So new opening positioning here on the front month, 47 puts out here, which is kind of interesting. And number one with a bullet by far, 52,000 is about 2x almost of the next largest one, which was the double calls, 55 calls. Again, out there in the front month. That's just where the action was this week. 33,000 of those lighting it up with pretty even paper in the beginning of the week, about 7,000 on Monday, about 6,000 or so on Tuesday. Then it kind of falls off a bit. And then today, rallying ho yet again. Surprise, surprise, we rally in the futures. The calls are getting a little bit of love today, with about 15,000 and change going up today. So of that 33,000, nearly half going up today. So a pretty big print here for the double calls. Then we drop off a little bit again down to the 49 puts, so getting closer to that much ballyhooed 50 handle, with about 29,000 of those bad boys going up this week. Again, fairly even paper, about 8,000 contracts today, yesterday, and Monday, and some sprinklings in between there for a total again of nearly 30,000 going up on the week. Interesting stuff out there. So again, the lion's share of the big paper was in the front month. Doesn't mean that there were no people playing farther out. We saw the 52 calls out there, and these are SEP looking at for about 22, actually about 8,700 of those went up, including a big print of 6,000 and change, pretty much all of that opening on Tuesday. So one large block there on the 52s and moving it out there in SEP. So it wasn't all front month. And we get a little bit farther out beyond that. We get all the way out to June of next year. And it is Upside Bulls playing, with the June 60s lighting it up to the tune of 8,000 contracts. The half of those, pretty much 4,000 printing, all opening on Monday, and the rest scattered throughout the week. So pretty much all of that opening paper as well. So if you're kind of wondering, hey, how are people positioning out here a little bit longer term, we are seeing a little bit on the bullish side. The 60s were popular in June and Dece of 2018, with about 2,400 of the D60s going up as well. So a smattering of longer term call paper, narrow term, it was all puts all the time with a bunch of other calls, and pretty much everything was active in the front month this week. So a lot of interesting stuff to parse. Nick, I know you've been keeping a close eye on that quick skew as well as whatever else has been catching your eye out here. So break it down for us, sir. What's been catching your eye out here in crude this week?
Yeah, I'd just like to add on to some of that 60 call talk that you just mentioned. Out in the June 2018 contract, that was an opening of almost 7,000 contracts. So of the total volume of 8,400, a majority of it, 85% of it was, 88% of it was opening. So you start to see some speculation in terms of people, and we just heard from Matt that wasn't necessarily thinking that we were going to go that high, but you do see some people starting to look out there and maybe take some flyers, because those are pretty cheap. I'll take a look and see what the premium is, but taking some flyers out there long term, because I believe $60 is a break even price for a lot of the producers, I think, up in Canada as well. So you never know that if the OPEC comes out, does the same thing, we're going to get a little push. I want to talk a little bit about what the charts, what I think might happen or what could happen based on the price action after the last OPEC meeting. But that 60 strike, like Matt said, that it's the 40, 45, 50, 55, and 60. Really, if you look at it, I tweeted out an open interest chart about 5 minutes ago, and then retweeted it with comments after Matt made mention of the 50 strike. 50 strike has the most max OI right now, and then you have the 40 and the 60. So we're pretty much range bound there. I always like to mention the open interest and how that's affecting the range. So on the downside, obviously, is going to be support 45, like Matt mentioned, and then down below that 40. So it's going to be hard to really push those levels. And when we bounced off those, we saw 44 earlier or late in the week last week. But we came right back up from there. And then on the upside, 55 and 60, that's kind of our 45 to 55 looks like our range that we've talked about for a long time now. And open interest is really, representing that as well. And as Matt mentioned, you start to see those high OI strikes, you're going to see a lot of hedging taking place there. So I think again, and I always preface everything that I talk about when it's not related to Eurodollars or rates, is I don't know anything, but I feel like there's some opportunities for people to take a few flyers out there, especially in one thing I wanted to make sure we mentioned was the weekly option that expires the day after OPEC, which is the LO4K7 contract. So that contract is out there, and you can buy some pretty you can buy a 55 call for $40, 54 call for $90. So I think that if we start to look at where we were after the last OPEC meeting, we kind of jumped up. I'm looking at the chart now. We jumped up around to 52, and then we kind of gradually pushed to 54, and then up to 56. We hit a high of 57 and a quarter, a little bit below that. So, and that was over the course of a month or so. But depending on the rhetoric and that kind of thing, it might be worth looking at those weekly options, right? We had June expire this week as well, right? So a lot of that action in July was a roll into the roll from the June into the July, but still, as much as the increase in those weekly options that are very well priced now in the CME group on the electronic platforms, you still didn't see the volume that we could see there, especially given the meeting date. So that's actually, of all the crude or Brent contracts out there, that LO4K7 contract on the CME fits the OPEC meeting perfectly. It expires the day after, so you get the benefit of the meeting itself, and then you get the opportunity to trade the next day. So you turn your option position the day of the meeting into a futures position, basically the day after the meeting. So it's worth taking a look at. It's like 2,400 open interest there. Had an increase of almost 125% this week alone. Not a tremendous amount of open interest, but still a lot of opportunity there. Like I said, there's a lot of options under $500 or under $50 that you can play some potential upside move if we get something even remotely where there might be some more extreme cuts in the production. But again, I don't necessarily think that's the case either, especially given all the shale production and that type of thing. We hear Blue Putnam at the CME talk about that all the time as well. So anyway, that's my thoughts on the open interest part of things and just sort of looking at particular options. As far as the skew goes, I think last week, and it was kind of unfortunate that we couldn't have a talk last week because it was just, I was out of town. Mark was at the OIC, but we saw really in our quick skew numbers, we saw really the compression of that parameter to the tightest it's been in a long time. And that means that the calls and puts in the July contract were not the same price, were not the same volatility as the at-the-money, but they were really, really not that expensive. And it's the least expensive they've been in months. So I was kind of bummed that we didn't get a chance to talk about that. But and today you see them, the puts are more expensive and the calls are less expensive. So we had a little bit of a spreading out there. But the reality is it feels like that rich and cheapness that we've seen between the puts and the calls, it's starting to narrow just in general. And I think that comes from, as we continually trade in this range, right? We kind of keep testing these ranges. As Matt said, we down on the 45, we got some support. And now we're just sort of back up in the middle of a 50, right? So I think we're going to start to see that vol skew balance itself out here. And that's really the takeaway from here, especially when we're looking at the July contract as sort of as the place to play after the OPEC meeting. So we see that, and the volatility, it's not as low as it was when we talked a few weeks ago, but it's still not. We've had some moves, but it's still not tremendously expensive. So I think that if you're looking to take part in what's going to happen next week, you look out to that front weekly, the LO4 K7. It's got 7 days to expiration, so it'll be expiring right about now, and see what you think you can do for $25, $30, or $40.
Yeah, it's a good point about the weekly options, because we talked about them before. It's been a while since we brought them up, but this would seem to be an ideal use case period for the weekly options. Of course, we have a big event coming up next week. I'm going to get Matt's opinion on that in a little bit about what he thinks coming up with the big OPEC meeting. I'm sure that's driving a lot of paper for them at RCM as well. But of course, when you want to play that with options, it would seem crude weeklies were tailor-made for this exact type of scenario. We saw a nice pop last year in November with the big crude OPEC meeting where they made the initial cut. So people are hoping for a similar pop. And as Nick mentioned, that weekly week 4 that expires on Friday, 26th, that lines up pretty nicely with the event. If you're playing monthlies or other things like that, you have all the other issues you have inherent with a longer term contract. You have more premium than maybe you want to deal with, or more time than you want to deal with. If you just are focused on speccing or hedging or trading around the meeting next week, then that week 4 WTI contract seems pretty tailor-made for you. And we've been talking about this, Nick, for a while, about what's up with the WTI weeklies. Why aren't they getting more love? And it seems like maybe in aggregate, maybe who knows, maybe we've played some small role in this, Nick, us kind of collectively beating the drum for WTI weeklies. Maybe we've slowly managed to turn the tables. We got a great chart here our friends at CME put together. I'll tweet this out for everyone so you can see it as well, and we'll put it in the show notes so you can see it if you're listening after the fact to the podcast. Slowly but surely, the ADV here in these weekly options has been climbing north. It seems like the inflection point was, surprise, surprise, Q3 of last year, where it really started to turn around and get into, which is, of course, right on the time we started really beating the drum for them a lot here on the show. So maybe a little bit of a patting on the back is due for us as well, Nick. But yeah, it's been slowly and kind of inexorably rising. Last year, ADV was somewhere around 1,000 contracts. That's a day, of course, ADV. Now up to about 2.5 times that, about 2,600 contracts a day. So, and even of late with all this action in crude, it's a little bit higher. It's about 2,700 to 2,800. Actually, that's in May, so that's the most recent numbers, right around 2,800. So slowly but surely, we're up to about nearly 3x, Nick, for out there in the weeklies. Again, it's a small number, so it's kind of easy to budge. But this, I think slowly people are starting to realize, I'm not sure what's taking them so long, but slowly they're starting to realize the efficacy and the use case for these contracts. We have some people, particularly for a show like this, who are flocking in, who are active retail. They love all things weekly in every other product, so they'll trade it, in the minis. They'll trade it in your Apple weekly, whatever the product is. They're going to trade a weekly in it, and they get to crude and they trade longer term. I don't really understand that. So it seems like that narrative is finally starting to play out. I don't know, Matt, maybe I've asked this to pretty much everybody else who's come on the show, so now it's your turn to kind of figure it out. Again, you're engaging with a lot of the retail and the institutional clientele out there, so you kind of see it on both sides of the fence. Are you seeing a lot of uptake in interest in these weeklies? Because again, we have a big event next week. You'd think, this product was tailor made for exactly that type of event. A, are you seeing a lot of interest for these products going into that event? And then B, what are your thoughts on the event itself? Obviously, it's a potentially another inflection point here for crude. What do you think we're going to see coming out of that?
I definitely see some talk in terms of activity, not so much. I think it's just a matter of time. And as you said, you're beating, you're singing from the top of the buildings and trying to get the word out. I mean, we definitely see growth in weeklies, but not so much in crude oil. You see it in S&Ps with the Monday expiration that just launched Wednesday, Friday. I think it's just a matter of time. I mean, most of the guys that we're talking to that are trading energies, whether it be self-directed guys, hedgers, managed futures, portfolio managers, they're trading, the standard contracts. So they're trading, the front month they're trading July. We see them taking a stance out till the end of the year even. There was some interesting activity there out until Dees. There's guys, to Nick's point about buying lottery tickets or flyers. I mean, there's almost 7,000 December $100 calls. Do I think they'll go intrinsic? Probably not a chance in hell, but maybe they could move. If I'm looking at just putting on a trade, whether I'm trading the weeklies, which I think could make sense to trade through the OPEC meeting and then have Friday, you could also look at just a front month, and I just pulled this up when you and Nick were chatting, and it's not a perfect strategy, but looking about $5 out, buying 55 calls, $5 out, buying 45 puts. I just wanted to, back of the napkin math, see what that looks like, because you got 4 weeks on that. I think either leg could go intrinsic. I don't know which way oil's going to go, not predicting it, but to say oil could move $4 and change or $5 and change in the next 4 weeks, I think is realistic. We've seen several dollar moves just on an OPEC reaction. That type of strategy costs $650 to essentially say the market's going to have some volatility and move. And we've seen volatility return to the marketplace, not to shift gears. Look what VIX did this week, and that could potentially spill over with volatility heating up with other sectors, whether it be financials, currencies. I mean, with the Brazilian real yesterday, big moves in cotton this week, big moves in livestock. So, maybe volatility is coming back to the marketplace, which I think is good.
Yeah, a little bit of vol, not maybe too much vol hurt a lot of people. A little bit of vol never really hurt anybody, and it brings a little bit of life back. You mentioned, of course, S&P vol has been kind of anemic this week, notwithstanding people have been saying, where's the vol? So a lot of them have been coming over to the commodity side of the fence to try to find that vol. So it's been a nice driver of activity and volatility. Nick, anything else here on crude before we move off?
Yeah, and I'll concur with July in terms of the pricing on that strangle as well. I looked out there; it's $650, maybe a little bit cheaper than that on Monday after the K comes out of there. There is a little bit in that, but the other way I like to think about it, right? If you go look at the vol term structure right now and you include that weekly, you're going to look like you're paying a lot more money in terms of volatility. Now you are, right, from a practical standpoint, but the reality is you really, at that point, you just become premiums. It's how premium and sensitive you are for the weekly contract. And I just went on CME Direct, the CME Group trading platform, and I was looking at the spreads on the markets and the regular contracts and the weeklies. And I know it's past the close right now, so it may be misrepresenting a little bit, but the weekly spread is probably 1.5 times as wide as the regular contract spread. So that could lend to some of it, but I still don't get it. It still doesn't make any sense to me why there's not more volume in there, especially given the fact that you're basically, it's like Matt said, lottery ticket. That's what it is. It's not volatility anymore. It's like a binary. You basically can buy a bunch of binary options for next Friday, and it's better than being on the other binary exchange, because these are ones that you're actually tied to the you're tied to the underlying. You're watching it the whole time. It doesn't cost you hardly anything, and you have some good opportunity as far as you can do a pretty cheap strangle around that in the weeklies as well. So it's worth taking a look at, and it's just going to get cheaper, right? If we kind of trend around this $50 mark for the next 3 or 4 days, those will maybe hit a point where they won't go much lower from a premium standpoint, but at some point, I believe that you're going to see some big volume in some strikes that aren't so far from the current at the money in that LO4 contract next week.
Yeah, good points. We got to keep moving with the show. We could probably talk crude for the rest of the show, but there are a few other products we want to get in there. We asked you guys what else you want us to talk about, and number one with a bullet, about 73%, saying gold. So I don't want to disappoint all of our gold bugs in the audience, even though we got some questions. We'll probably get back to crude a little bit later. You always get drawn inexorably back to crude. But let's get to the shiny stuff out here, the metals. It has been an interesting week. Yet again, crude's been moving, so has gold. Gold kind of rocking and rolling. It's been, rallies hard, it sells off, or rallies hard, it sells off. This week was a rally hard mode. The futures up about 25 handles, or about 2%, pretty much across the board, right around that 12 double level or so, 1260. Again, depending where you're looking, how far out in the futures. So an interesting week. The bugs happy. They're leading the dance yet again. And of course, all this upside, actually a little bit of an uptick, easy for me to say, uptick. Again, last show of the week, listeners, uptick here in the old volatility. Not a ton, but a decent amount. For a while there, the gold skew has been one of the more interesting things to watch over the past year or so from a futures options or just about any options perspective. I'll let Nick get into a little bit when he gets into the quick skew, exactly what he's seeing right now. But in general, it's been one of the more malleable skews we've seen out there in a product. 1 week, the calls are bid almost vertical. Everyone has to have them. It's a straight up call play. The next week, gold selling off. We see the calls coming in. We see the puts getting a nice bid. Maybe it comes back to a smile. Then maybe the week after that, maybe the puts are leading the dance, and then it shoots back up and the calls are leading. So, people who are out there who are maybe tired of the traditional investment skew you see in an index or you're seeing in a big equity option, something like that, they want something a little bit different. Gold is definitely the place to be because it moves and shakes, and the skew moves and shakes, which makes it interesting and exciting. So if you want to see how your traditional strategies like protected puts or covered calls or all those other things play out in a more malleable skew environment, skew and gold, certainly the place you want to be playing. In terms of where people were playing this week, actually, unlike crude, where all the action was in the front month only had actually about 37% of the volume, so a little more than a third out there in the front month. It was still number one by total volume, but the actual big trade of the week, the number one with a bullet trade for the week, actually I believe was in the SEP out here, the SEP 1310. Calls. It looks like it might have been a bit of a vertical going up higher, 1310, 1360, because both of those strikes were very active. A total of about nearly 16,000 of the 1310s and 13,500 of the 1360s, and a lot of that coming on two big blocks on Wednesday with about 15,500 of the 1310s and about 14,000, actually about 13,400 of the 1360s. Again, pretty much all of that on both of those strikes opening. So again, it looks like a pretty size vertical. Nick has the block analysis there. I'll let him get into that as well. But a size vertical here and a pretty aggressive one, 1310, 1360. Certainly given where we were trading a week or so ago, those are pretty aggressive numbers. But then where we were again a few months ago, not so much. So that's what makes gold so interesting and so fun. It's not just the skew move, but the long-term sentiment, the short-term sentiment. It changes so aggressively. We're seeing a lot of impact on this now. Obviously, there's a broad economic impact on gold. Gold's very much a dollar play right now as well. So there's a lot of different factors that are moving and driving gold activity. Once you get out of that, you get back into the front month where a lot of the other activity was. It falls off a little bit, but still fairly active. About nearly 9,000 of these June 1275 calls lighting it up this week to the tune of a pretty even volume pretty much across the board. Wednesday, Thursday, and today being the most active with about 33 to 2,700 or so of those going up pretty much each day. And then we drop off a little bit again to get to the 1250 calls. So again, pretty much at the money calls here lighting it up this week with a little bit of mixed paper back and forth as you might expect on the at the money strikes. Some opening, some closing over there, 12 half puts. So again, 12 half strike, pretty active as well with about 4,000 of those contracts out there as well. So a lot of paper, a lot of diverse paper out there as well. I'd be remiss if I didn't at least check out into the mists of the future to see what the gold bugs are up to. And they were playing in the upside in the calls, as you might expect. Looks like it might have been actually a bit of a time spread going up out here with the, what do we have, June Dees 14 half, 15 half maybe a time spread. Both contracts doing exactly 1,412 contracts. I've been doing this long enough to know that's probably not a coincidence. That went up on Thursday on the 14 halves, and on the 15 halves, I'm going to guess Thursday. Yes, also on Thursday. So I'm going to go out on a limb and say a nice calendar there on the 14 half, 15 half, June 2018. So that's next year, listeners. So there is some long-term paper lighting it up as well. And not to be dissuaded if you think it's all upside all the time in the long-term paper, nearly 3,000 of the 1,100 puts this December, the 2017, also lighting it up here this week. So it's not all calls all the time. It's not all gold bugs all the time. There are some puts lighting it up, including a big block of 2,300 going up on Wednesday, with about 1,500 of that being opening. So interesting stuff across the board. Nick, a lot for us to parse here. But before we get to that, I want to rope Matt back in here really quickly because there is a lot of stuff. I'm sure when he's not picking up the phone, talking to clients about crude, I'm guessing gold is probably in that conversation quite a bit as well. So what are you hearing? What are you seeing from the RCM clientele when it comes to gold? What are they asking you? And what kind of paper is lighting it up over there at RCM these days?
Yeah, I mean, there's not a lot to add. We've kind of been sideways. We want to find a market. Our clients are generally, trading markets that are moving. And, I just looked at, what gold has done over the last week, over the last month, over the, year to date to try to disseminate it and figure out, all right, we're in a bull trend, we're in a bear trend. Because if you look at, what we've done year to date, gold's up about 8%, 8.3%. Okay, so the market's moving higher, right? But okay, what has it done this month? It's down 2.3%. What did it do this week? It's up 2.13%. So you can't really identify where the market's going. It's really been a tug of war. I was looking. There's plenty of paper in action, as you said, taking a stance on both sides in June. So I looked prior to the show, all right, what are people doing in August? There's really not a lot of people playing in August. I mean, the most active contracts I found were all on the call side. 1,300 calls, there were under 3,500 of them. The 1,400 calls, there were just over 3,500. There are some more serious, positions, some bigger size going out to December. So, I think the market is kind of telling you, hey, we may continue this sideways action back and forth, and then the longer stance out until the end of the year, a lot can develop over the next 6 months. You see about 22,015.75 calls. And then on the flip side, on the put side, where I saw most of the action, and Nick can probably give me some more color here, the 1,200 puts, there were about 8,500 of them. The 1,100 puts, there were a little over 9,000. I think it's a two-sided trade. Most of my personal clients that are trading metals, we've seen really light volume. These are guys that trade and have an opinion on gold, silver, copper, to a lesser extent, palladium and platinum. There hasn't been any real size or that I've seen people taking a stance bullish or bearish. They've been elsewhere trading other markets that are moving and have a more identified trend, at least from my stance.
Nick, same question for you then. Obviously, Matt wants to know what you're seeing out there as well. What are you seeing in terms of quick skew, in terms of volume, and maybe some of these big block prints that I was referring to earlier? You got any color on those as well? Have at it, sir.
Yeah, the 1310 and 1360, those I looked in the block list, and those looked like they didn't trade as part of block. So that looked, I would agree that's probably some vertical that went up, and then, and because that open interest, those were openings for each of those strikes on that day, and keep in mind that the open interest this week alone for September is it's up almost 80%, right? So from that standpoint, that I don't know the gold that well. If that contract just rolled on recently, if they stagger the availability of that expiration, but we doubled up on the open interest there, and I think that's because it's a newer contract. But again, just observing some other things, I went and looked at the weeklies out in gold too, right? And there's 600 contracts open interest. Now it makes more sense to me there that because I think gold tends to be looked at more of a long-term thing, right? So the weeklies may not necessarily play into it as much, but you would think, there are events that occur throughout every trading day where you would expect there might be some short-term activity in those shorter dated, easily tradable options. But again, it's a surprise. I don't know if it's because they get treated as a separate product in a lot of systems, which I was thinking about as you guys were talking, or if it's just because people just don't look at that time horizon for gold in particular, because it's more of a long-term play. We've been talking about one thing. Let's talk about the vol, and then let's talk about the quick skew. So, and another thing I want to mention is Matt was rattling off some good numbers in terms of the open interest in the volume, and that information, if you're listening along and following in during the show, if you click on the most active strike and option type, it's going to say a call or a put, you're going to see those exact same numbers that he's talking about. So all that information could be available for you right at your fingertips while we're talking during the show. Looking at let's start with quick skew, because those numbers have changed most dramatically this week. So if we look at the quick skew, the calls got more expensive this week to the at the money, and the puts got less expensive to the at the money. So we did see a little bit of shift in the vol curve, and that comes in the July, the August, the September, all the way out through probably throughout the end of the year. So we did see, again, and I think we tend, as you mentioned earlier when we started to discuss gold, we tend to see that flip-flopping of the curve a lot more, of the vol curve a lot more than we do in the other products. So I'll push out this gold quick skew right now, and you guys can take a look at it. I'm just going to shoot it out and mention Mark here and make sure everybody could see that. Again, that's following pretty much a pattern that we've seen all along in gold. The market moves up, we start to see the calls get bid. Market moves down, we start to see the puts get bid. And I don't think there's any surprise there. As far as the volatility goes, we've been talking all along how low the gold volatility is. And I think that I don't think there's anything new here. We're still, I'm going to go out about a year and see where we stand from that standpoint. As far as the year goes, we're around a 12-month low in terms of volatility. If I go out to 3 years, we haven't seen too many. I got to look at a different contract here. If I look at August here, yeah, we are really not in a very exciting a place with this product in particular. And again, it's got a lot to do with what we talked about earlier. Matt mentioned it in the crude, where we have a pretty fixed trading range. In the gold, we have a pretty fixed trading range. And when we see that, we're going to see sort of this low volatility environment. But with that said, as we just discussed, you are seeing the vol curve, the skew itself flipping back and forth. So as much as there's a pretty established range, there's probably some opportunity there in terms of playing upside and downside when it comes to the shape of the vol curve.
Good stuff. I think we got to leave it there because we got some people who want us to answer their questions. So without further ado, let's get to it and get to some futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. Like the man said, this is the portion of the program where you guys take the reins, questions, comments, insights, pearls of wisdom. Hit us up. We do love to hear from you guys, just like our friend here did. Let's start off with this one from Andy, going back to WTI. Andy Sullivan wants to know, you guys buying this rally in WTI, or are the options telling a different story? Well, we kind of hit on this when we were breaking down WTI earlier in the show. When we're looking at this kind of stuff, obviously the price action is one thing, but we like to look at the skew. Nick broke down the quick skew earlier and kind of told you what he was seeing out there. Net here on the skew, if you pull it up, and you can do this over there in Quick Strike for yourself there, Andy. If you pull it up, you'll see a chart that looks remarkably similar to any traditional equity or index option, that the puts are fairly bid, the calls are fairly offered. And so that pretty much tells you where the long-term structural concern, interest premium, call it what you will, is in WTI still. It is still in the puts when you're talking long-term. Now, very, very near-term, which of course we're talking next week, we were talking about the weekly options as a result. In those weeklies, there is a little bit of a bid to those calls. So some people are in there specking. It's not all puts all the time. Some people are specking and maybe a little bit of pop next week. But it seems like they're really just looking to vote and reaffirm that cut they did before. So I don't know if you're really expecting a ton of upside. But that said, I don't know, Matt, what do you have to say here for our friend Andy? We talked about the options volume a bit already, so we kind of talked about that a little bit. But what are you expecting? I don't think we even got to this. What are you expecting coming out of the meeting next week? Are you thinking we're going to reaffirm? You think it's going to be a dicier story? What are you thinking next week?
Buy the rumor, sell the fact. I mean, I think OPEC cuts. I think it's priced in. That's why you've seen the move happen. I think it's going to have a difficult time getting above that 52 to 53 level. We had some guys that were long that were lightening up, and we have guys, jumping in front of a freight train and getting short here. Forced into the market. I'd rather be short than long just because we've seen, $6, $7 move off the lows here this week.
Nick, same question for you. Any extra thoughts here on crude skew or anything else you want to tell our friend Andy Sullivan?
Well, I mean, like I said, I don't know anything. I don't have customers that are necessarily trading or that I talk to. I'm looking just at the charts and what the action is and where the open interest is. And I think, I agree that the cut's probably priced in. I still think people are going to dissect what they say to see if I think people want it to go higher, obviously, just because that will, facilitate some of their positions. So I think that, Matt mentioned as well, we've had a lot of 2 and 3 and 4 and 5% moves. So we could see some intraday stuff prior to the meeting, the day of the meeting, and after. But where we end up is probably likely right in the middle of this range where we've been, because I don't think there's enough news out there to push us too far down or too far up at this point.
All right, next up, we got one here from kind of a comment, kind of a question, a little bit of both. Comes from Jingle6. He says, dudes, you're missing out on the hot new commodity trend. Cryptos rule everything around us. He goes on to say a $10,000 investment in gold back in July 2010, at least when he wrote this, I'm guessing it was earlier this week before the rally, is now worth $9,981. A $10,000 investment in Bitcoin, I'm assuming in that same time frame, is worth $201,553. So there you go, Mr. Jingle6. He's suggesting an entirely new commodity category for us to analyze here on the show, Nick, which is the cryptos. And he's not alone. There is a lot of love for these, a lot of interest in not just the Bitcoin, but the blockchain and what it can do. Between those two things, it really has taken up a lot of the oxygen in at least the tech side of the derivative space. One of the problems, though, really, is there hasn't been a lot of real legit on-exchange action for us to analyze on a show like this. Obviously, CME hasn't really been doing a lot of big Bitcoin procs, but that is starting to change. In fact, just very recently, you got good timing here, Jingle6, because they're trying to look into bringing blockchain, which is Bitcoin tech, to use to trade other real assets like gold. So they talked recently about bringing some sort of digital quote-unquote gold contract using blockchain. So that's kind of a bit of a combining of the best of both worlds there. A contract people like gold, and the methodology people like, which is blockchain. But if you want just the pure cryptocurrencies, which it sounds like what you're after, some other big news coming out of CME. I think people who like to look at the patent stuff, they keep an eye on all those things. And back on just a couple weeks ago, May 5th, CME filed a patent for some more digital currencies and cryptocurrencies going on there. So who knows? We may be seeing a lot more of this stuff hitting the exchange perhaps sooner than we think. Actually, you're right. This guy, I noticed that he says the 10,000 investment is actually worth 201 million, not 201,000. I misplaced the decimal point there. So that's a decent return, shall we say, on their investment. I don't know, Matt, maybe we'll start with you. A bit of a out of left field question, but we like those on the show too. Do you guys get a lot of love for Bitcoin and related cryptocurrencies over there at RCM these days?
No, but I'll say two quick things. One, I threw up in my mouth earlier this week where I saw a similar analysis. I think it was on Twitter or LinkedIn that 10 years ago, you could have bought 2 medium pizzas. I don't know if this was Domino's. I mean, let's not get into a debate over, Chicago pizza or New York pizza, but let's call 2 medium pizzas, let's say they cost $30 or $40. And fast forward 10 years, that investment, had you put it into Bitcoin, would be $16 million. Now, that's very good pizza. I mean, that's insane to me. That just happened to me here within the last couple of days where I heard that. And then I have a very good friend of mine, really sharp guy that works at a fund of funds who will remain nameless, but he actually manages hundreds of millions of dollars and took a 2% position in Bitcoin 6 months ago for all of his clients in the anticipation of, hey, this could go bust and they're going to lose all their 2%. And look what has transpired in the last 6 months. So a long-winded answer to the question. I know nothing about it. We don't get a lot of love here about Bitcoin, but it's starting to get my attention when a good friend of mine that's been extremely successful is taking a position in his hedge fund. And had I, instead of bought pizza 10 years ago, put it in Bitcoin and I could have $16 million, now I'm starting to pay attention.
Yeah, that's a tasty pizza, $16 million worth of pizza. But, Nick, the impediment for us and for a lot of people to really get into these products was you kind of had to go through some shady third parties like Mt. Gox, which infamously imploded a couple of years ago, and others to really get access to these things. They weren't deep. They weren't liquid. You couldn't really trade them in a traditional brokerage accounts. A lot of the things people have come to expect from a reliable, deep, liquid derivatives type product, they couldn't get there. That seems like, from just that news we saw in the last couple of weeks, it seems like that trend is starting to change. Do you think our friend Jingle 6 is onto something? You think we'll be trading a lot more of these, maybe even covering them on a show like TWIFO sometime in the near future?
I think for sure you're going to see it. I mean, as you can attest, this year it was all market data and at a lot of the conferences. Last year it was all Bitcoin, and maybe even the year prior. I mean, the CME has an index that's updated at the end of the day, and then an intraday index as well. So it's moving that way. I've tweeted a chart out about the Bitcoin price chart from 2010, and by my calcs based on this chart, a dollar is worth $10,000 then is worth about 10 million in change now. So and this might be, maybe this doesn't have some of the active. This is a pretty recent thing. It looks like it's through most of this year, but even so, it's still a pretty good investment. So I don't know if it's $200 million, like he says, because that's pretty crazy. Then every one of us should have put something in, and we wouldn't have. We would have been better off. We could have put $10 in, and we all be much better off, right? I'll settle for 200 million divided by 1,000 any day over a pizza. But yeah, you're inevitably going to see this trade because it's an index, and it's an index of value, right? So once there becomes an easy facility to do that, which I think the exchanges are trying to move toward, it's going to be there. And because and the whole point, if it's Bitcoin within the framework of the blockchain, which is a protective environment for the value of your Bitcoin, right? That there's all those impediments to owning Bitcoin, right? You have to have it on your computer, then you have to copy that key, and if you lose that key, you lose your Bitcoin. There's no way to get that stuff back. So from me, looking at it from my side, I'm very frightful of anything where I'm responsible entirely for. It's meaning that if my computer has a fail, I'm in trouble because I don't have the key to unencrypt the value of my Bitcoin, right? So that makes me very nervous. So until they get that sort of straightened out where there's a repository for it, and I believe that there is for even your key, I think that it's going to take time to get to the general public. But it seems like a great one to trade, right? It's a number. You're trading a number, and you're trading speculation on that number. You're not really, there's no exchange for physical or anything like that. You don't take delivery on anything. It probably will be a rolling index that'll never expire because it'll just be out there in the blockchain. So yeah, it's going to happen. You look at the charts, you can see that there's interest, and then you watch the exchanges, and when you start to file for intellectual property and different kind of indexes, and you're offering them up already, it's inevitable. It's going to be probably a very popular product.
Yeah, I'm looking forward to that day. You're right. There is still a lot of things to be worked out. Of course, there's still even a regulatory kind of factor hanging over this product that could all cease to exist from a regulatory perspective. So there's that factor out there lurking in the weeds as well. But once all that seems to get sorted out, you're right. It might be an interesting area. I think we can all use a few products that are new and interesting and exciting that get some decent volume and some traction. So that was certainly the order of the day at the Options Industry Conference last week. Everyone was kind of wringing their hands saying, where is the next big wave of products and innovation and volume? Maybe this is it. All right. Speaking of esoteric products, we don't really talk about a lot in the show. We got a last one. We got time for one more here. This comes from Roger Barone. He sends a link to this article, I think it's out of Bloomberg, saying the cotton squeeze sends prices to the highest levels since 2014. He says he's loving this. He's excited about it. He wants to know if you think it can hit $1 by July options expiration. If you're not following cotton that much, they hit the highest level since June 2014. I mean, strong demand for U.S. exports and a bit of a squeeze, at least on the July futures. And so options are pumping as a result. You know, we don't really talk a lot of cotton, quite frankly, on this show. It doesn't do a huge amount of volume, and we talk about other things, you know, like silver and others that are kind of low on the volume spectrum. Cotton is even kind of below that in a lot of regards. Not a heck of a lot lighting it up. Nick, you analyze you look at the numbers a little bit more than I do in terms of some of the more esoteric ags out there. Do your eyes ever flit onto cotton? And if so, what do you have to say here for our friend Mr. Barone wants to know if we can hit $1 by July expiration?
Well, I think that $1 is $100 because right now July cotton's like $74. So unless my scaling's off,
I was kind of wondering about it. I was assuming that as well.
It's 70, like the July contract, 79.5, 79.45. It's cents per pound. So he's saying we'll go to $1, I think.
Oh, okay. Cents per pound. Got it. All right. So there you go. See, and I learned something new, and that's what I like about it. We do have the ability to look at cotton internally here. We are working on being able to get those versions of the products out there, but there's not. I'm looking at they have about a year's worth of contracts that trade on that, and the total open interest looks to be about 200,000 across that entire year. And Matt, you probably know better than me, but it looks like the front contract trades and then a December contract. So and then there's some more OI in the next quarterly, which is March. Don't know much. Go ahead, Matt. Sorry.
I was surprised because I don't really look at cotton, but you know, based on getting ready for the show, just looking at a little action and. Yeah, you're exactly right. There aren't a lot of players. I mean, the total open interest in the July, which is the most active month in futures, is about 119,000, which, I mean, is the volume you do in some other markets. Forget about open interest. But there's over 10,000 calls out there on an 85 strike. There's over 10,000 calls at 93. And then there's about 2,400 calls for the dollar. Now, to get to $1 in the next 28 days, which June 16th is your July expiration, I think that's a far cry just because it's about 25% move from current level, and you've seen already a pretty significant move. We hit a 7-year low in cotton about a year ago at 55 cents, so you've already appreciated considerably for it to continue along this path. I don't see it happening, but clearly there's 2,425 contracts out there that somebody thinks you got a shot at $1.
All right. That funky music means we've come to the end of another epic hour in the world of TWIFA. We covered a lot of ground today, hit a lot about crude, got into some gold and some gold bugging for all the gold bugs out there. And then your questions brought us back to crude. And then all over the place into cryptocurrencies and wrapping it up with cotton. This is probably one of our more wide-ranging shows. We love it, Nick. It's good. I love when you guys get involved and you ask about some of the crazier products out there because that's how we get them on our radar. You guys ask us. So keep those questions coming. We do love to hear from you guys. But before we go, let me go around the horn one more time to see what's cooking with my fellow compatriots here on the old TWIFO program. Since you're our guest in the CME Group hot seat this week, Matt, you get to go first. What is cooking in the land of RCM alts that may interest our listeners here on TWIFO?
Well, when Gene reached out to me and said, hey, can you come on as a guest and talk about energies? I said, well, your timing is perfect because, you know, what we pride ourselves at RCM, one of the things we try to do is educate the investors out there, and we have started doing not only live seminars, which we've been doing for years, we've started to do some webinars as well. And the next one we have happens to focus on energies. And the CME is involved. So we have an economist from the CME that's going to be speaking, and we have 3 PMs that actually trade energies every single day. So your listening audience can go to Learn Alts. That's learnalts.com, and we have some more information on it. It's held Thursday, June 22nd. And, we also at RCM put out a blog and commentary, so just check that out as well at RCM Alternatives. Look at our blog. We put a lot of information out there trying to help educate investors make informed decisions. So that is what is new at RCM Alternatives.
Guys got a lot of stuff cooking with our buddy Eric Norland over there at CME. He's been on the show many times, so I'll look forward to see what he has to say. Check out learnalts.com to learn more. Listeners, we've got a big countdown clock right there, so that'll tell you when the next webinar, I believe it is, coming up, and the event schedule. It's like you can even get some past webinars on here, too, so you want to get a little bit of past learning education in there. Head on over learnalts.com, as well as, of course, like Matt mentioned, the RCM Alts blog. They got RCM Alts, they got futures, they got wealth advisors. They have many different divisions. I joke with some other guys, it's RCM MISC. They do so much. But check it out on the Alts side. They got a lot of cool stuff cooking over there that may interest you. And last but certainly not least, Mr. Nick, you guys are always working on cool stuff, not the least of which, of course, being the live links on the TWIFO report. But aside from that, what else is cooking in the land of Quick Strike, sir?
Oh, boy. Let's see. So, well, if you're a subscriber already, there's a new version coming out this week. It's going to make it a lot easier for you to build your own custom menuing within the application itself. I think that we finally decided that we will be releasing a version of QuickSkew to the public, where we'll give you a limited look at some history, and then if you want to get more, then you're going to have to, come on board. But same stuff that we've been talking about. Keep looking at the tools. There's some new treasury tools coming out in the next few weeks for people that trade the 5 and 10 year, or the 2 and the 3 and the 2 and the 5. There'll be some tools out there as well. So enhancements to the application. We are starting to, if you're already a registered user, either in the free Quick Strike Essentials available on the CME Group website, then you should have seen some email campaigns that we're going to start putting out there, and those are purely to get you information about the tool itself and how to use it, and dive more deeply into what's available professional levels as well. You'll see those. So just keep an eye on the exchange website for all the free stuff, and then watch for those emails so you can learn a little bit more about what you might not be seeing within the application itself. And then if you're a subscriber, I think you're going to find what we released this weekend to be pretty interesting, because it's going to make things a lot easier for you to use the tool.
Check it out over there for Quick Strike. You can see all the cool stuff. Nick and his team, they're always cranking out new additions, new cool stuff. I see it in the dev version all the time, and it's always new bells and whistles. It's amazing how much you guys crank out over there. And of course, you can still play along all week long, even when the show is not live over there, cmegroup.com/TWIFO. While you're over there, at our friends over there at CME Group, check out their rebranded CME Institute, and you could learn all about all the different products, not just futures. It used to be the Futures Institute. They've decided there's more going on there than just that. They talk a lot of options too, so if you like some options education, I know you guys are always hitting us up for that exact sort of thing. They got you covered over there. Speaking of education, I'm kind of been getting into this RCM Alternatives website here, Matt. You got a lot of great stuff here. You got curated collections. You have a wizard to help you find stuff. You have education blogs. So check it out if you haven't done so already, listeners. RCMAlternatives.com to learn more. And on behalf of Matt and Mr. Nick and our friends over at CME, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And of course, for all of you who joined us live, we love you guys too. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.